Just making sure I'm showing live. All right, perfect. All right, let's do it. Let's jump into it. I hope you all had a fantastic weekend, Halloween week. So I know you guys are busy with the kids because I definitely am. Spare week and everything with them. So I've been in the office since early. Um, well, people are coming in little by little. Okay. Well, first things first, rates. We're going to talk about them today. I know last week we didn't because we were just going over the business planning thing, which is, I kind of want to touch base on with you guys towards the end. But since we haven't spoken in a while, the market has turned completely on its head. And as of today, the 10-year is at 4.24, with the average rate being 300 basis points more than that at 7.37%. Now, FHA rates are a bit more forgiving, but still in the high sixes at 6.918. What? So I understand that you guys, or a lot of people expected with the Fed funds rate to kind of come down, rates were going to kind of follow into place as well. And in the short term, I thought so. And short term ended up only being a day. I thought at least the next month or so until the next Fed funds rate. But we talked about this before, that the Fed funds rate isn't a direct correlation. It's really just because they both had a common enemy, which was inflation, right? Inflation hurts the Fed funds rate because borrowing money over time at 0% interest, which is what the Fed funds rate was at, doesn't do good for the economy when inflation's at 6-7%, which is where it was. And same thing for mortgage-backed securities. At the time, mortgages are basically just investments, right? That's all they are. At the time where rates were at 3%, 2.5%, right? Carrying that investment over a 30-year period, you're getting a 3% return as an investor, right? That's what that mortgage-backed security is. Well, if inflation's at 6%, that's where your mortgages are no longer worth what the price of inflation is at the time. So they both have that common enemy. However, they don't directly correlate. Now, the reason why I believe that that rates have continued to come up is just because of a couple of things. The Fed running their balance sheet, right, or running off their balance sheet, I would say. So during COVID, we spoke about this as well, right? During COVID, the Fed started to buy a lot of mortgage-backed securities and U.S. Treasuries to keep those down. And now, as they're kind of getting rid of them in the market, you're seeing those runoffs come back into the 10-year Treasury and mortgage-backed securities. But also, obviously, election time, right? Which I think is going to be the biggest thing. Is next week is the election. Next week is also the Fed meeting right after the election. So it's going to be very interesting to see kind of coming into next week how mortgages react, how the 10-year Treasury reacts once everything is kind of settled in, more so to speak, right? Now, existing home sales for September are out, and the median home price is at 405,000, which is up 3% year over year. So inventory is increasing steadily as well. We're at 1.39 million units in September, which is a 4.3-month supply. So this is a buyer's market still, and probably will be through the end of the year. Average days on market are 28, up from 26 in August. And these are national numbers, though, so keep that in mind. They're not, specific to South Florida. I'll have those numbers actually for you guys probably next week. New home sales are up 6.3% year over year as well. And these are, of course, new construction homes. At the end of September, there were 470,000 new homes for sale, which would put supply for new homes at about 7.6 months. However, only 108,000 were actually completed. So that number is skewed. Real supply would put new homes at about 2 months. So for those of you that don't know, when it comes to new home sales, right, they're selling these as soon as they basically get the green light from the city to be able to build on this piece of land, right? So they're selling this, you're going under contract about a year out, and then they start building after. So that's why that difference between what's completed and what's actually up for sale is so different. But the media is going to go over that 470,000 number and show that it's a 7.6-month supply when really only 108,000 are actually completed, and those are the homes that people can actually live in, right? So inflation, by the way, PCE, which is personal consumption expenditure, comes out this week on Thursday. The September reading for August showed that PCE was at 2.2% year over year, and core PCE, which strips out food and energy, was at 2.7% year over year. For those of you that don't know as well, the Fed is this is the exact inflation reading that the Fed monitors, right? When they're deciding if they're going to cut rates or not. It's not consumer price index. It's personal consumption expenditure. And the difference between those two is the consumer price index basically just measures the change of pricing in goods and services, as opposed to PCE showing what people are actually spending on those goods and services. Now, back to my original topic of rates and where they should be. The Mortgage Bankers Association thinks next year mortgage originations will be at $2.3 trillion, which would mean an almost 30% increase from this year, with rates potentially falling to 5.9%. And when they speak rates, they are talking Fannie and Freddie, usually, which means FHA rates could be even lower. Now, I know last year we went over towards the end of the year what the MBA thought was going to happen for 2024, and they believed a 20% increase from 2023. And we know that really isn't the case. From what we've seen so far this year, it's actually been lower. So let me pull up the actual number here if I can find it for you all, about how much we actually have been down so far year over year, because it's been significant in terms of at least mortgage applications specifically. I think the last time we looked at it, which was a month ago, it showed that we were down about 18%. So the last report came out on the 23rd here. So mortgage applications actually up 3% year over year. Look at that. Purchase applications specifically are up 3% year over year, and refinances are up 90% from this time last year. Refinances are making up almost about 47.5% of total applications. So obviously refinances are still happening, especially with people trying to consolidate, but also because people still think that rates are low based off of the Fed funds rate and don't realize that they have increased drastically over the past month or so, almost a full percentage point. Tomorrow, Hometown Heroes will be coming out with an extra $1 million. So if you did just get under contract over the weekend, or you got a contract last week, Thursday, Friday, let's say, anything between the past week or so, or you're expected to go under contract today, call that loan officer and ask them if the client qualifies for Hometown Heroes. And if they do, if they can sneak them in and get them that down payment assistance for 5%, because there's only $1 million coming out tomorrow. Okay. Now, quick housekeeping before we go for the day. I hope you guys have started working on the business plan or have started implementing it already, because that number of 2.3 trillion mortgage originations means money for you guys as well. Have you guys has anybody started working on it? Is it helpful? Is it not? Give me some feedback. No one? Well, I'll tell you this. I missed that meeting. I'll send it over to you. So yeah, I got you. So basically, we went over our business planning last week. I did a presentation talking about how to kind of formulate your business plan, what to look at, and then you guys already had the Excel, but we essentially send over the Excel sheet, and you kind of break down your numbers based off of your specific business, your averages, things like that. I got mine's done a couple weeks ago, and I've already started implementing it. And I think starting next week is where you guys will start to see. Send the info from last week, Mike. Yeah, I got you. What do you guys need, the presentation or just the Excel? Let me attach a file here. Oh, okay. You can do it right here for anybody that needs it. All right, you guys can get the real estate agent business plan from there. For those of you that missed the presentation, if you need help filling it out, just give me a call. We can schedule a time and I can help you kind of navigate through it, because it's a lot. If you don't understand where you have to put your numbers in, it could be a little bit confusing for you. and the presentation doesn't actually show you how to input the numbers. It just kind of goes over what to look for or what to consider when you're doing your business plan, personal goals, business goals, things like that as well. Okay, I see some emails on here. I will definitely keep note. I'll probably just resend it over to everybody in case you missed it, but you guys should have received it a couple months ago. I think at the beginning of September, I think I sent it. But no worries, I got you guys. Okay. But yes, implementing your business plan. So the reason why we do it so early, right? We talked about this, 60 to 90 days is how long it takes for your business to start converting, right? Any lead that you get typically takes about 60 to 90 days to close on average, right? You'll get lucky and you'll get that lead, and within the first week of showing them homes, they're under contract, they're closed within 30 days, right? But even then, that's about 45-day conversion, give or take, by the time they fill out the application, get the pre-approval, schedule the showing, stuff like that. So usually 60 to 90 days is when your business starts to turn. So if you want to start off January hot, you typically want to start at least the latest in November, usually about October-ish, to start getting the ball rolling for the next year. And I think this year specifically, well, every year people start to slow down towards the end of the year, right? And I think that this year is where we really have to push through to make sure we get into 2025 ready to go, to be able to capitalize on those on that purchase market that we're going to be seeing in 2025, according to the MBA. Now, I say that to say you guys are going to start receiving emails, calls, and texts from me on different things that I'm doing for you all starting now. I'm not even waiting for 2025. Last week, I told you all I'm the first to invest in my business. So I'm going to show you guys a couple of things that we have already implemented. I did invest in an assistant to help me kind of flow through things. It sounds a little bit bougie when you say it, but to be honest with you, I think it's the most important thing the most important person that I've hired in my business, like ever. And I think that's just because you guys know I'm involved in AREP, YRD, I run a team, right? Different things. So for me, it makes sense to be able to get one that's going to just help me focus and organize myself on a couple of different things. Let me see how I can get this shared. It's here. So I don't want to get. All right, perfect. There it is. Okay. So most of these things you guys already know, but I wanted you guys to see first, more so what we're going to be doing for you all. And you guys are pretty much the first ones that we're offering this to as well. So pretty cool. Obviously, first thing you guys know, Monday Mortgage Minutes, they're going to be a little bit different moving forward. It's going to be more presentation focused, inviting guests to speak, kind of how we had that attorney, the probate attorney come on and talk about the importance of, the wills and trusts and how to look out for and get business on probate deals. So different people like that is going to be kind of who we bring in to give you guys the insight on different parts of the industry. And it's not going to be the more so just the salesy, this is what we offer, this is what we can give you, but actual tangible things that you guys can take home. That's what I've tried to accomplish ever since I started Monday Mortgage Minute, right? It's not just about products and programs that we offer and how we do better when it comes to mortgage rates and things like that, but more so things that you can take home and give to your clients. So we'll be doing that. We'll be having, for sure, I know I told you guys in the past, and I lied this year. I apologize. But for sure, next year, 2025, we will have in-person Monday Mortgage Minutes starting every quarter. The first one is going to be in January, as soon as we kind of turn the new year, probably mid to late January, because I know in the beginning we're getting back to school and doing things like that. But that one's already going to be set up. It will be in the Miami Lakes office that I'm in now, not the conference room, in the presentation room that we have. And we'll be providing breakfast and stuff like that. And then as we kind of go through the quarters, we'll probably switch it up to different locations. We will be doing transaction coordinators for the agents that don't have one. Okay, so if you do not have a transaction coordinator, we will be providing you with one for every deal. Super important, I think, because not only for us on our end, I technically pay for my own transaction coordinators, right? Those are my juniors, my loan officer assistants, to make sure that the mortgage part of it is flowing. But a lot of agents, especially if I want you guys to be able to succeed next year, and I want you to have a little bit more free time and not worry about your contract to close and the timelines and stuff like that. For me to be able to offer this to you is better for both of us in the long run, right? Because now you're able to go out and get more business and not have to worry about what's going on with your file and stuff like that. But we'll be giving you guys a free transaction coordinator with every deal that is under contract. You guys don't pay a thing. It comes out of the team. We're going to be doing mortgage 101s as well. So if you're a broker, if you have beginning agents, or if you are a beginning agent, we'll be starting. Actually, the first one's going to be in December. We'll be coming out and giving you guys some information on that probably within this week or next week. It'll be on a Saturday for part-time agents, of course, to be able to join in or come in and be able to learn about mortgages. Saturday morning, probably from like 10 to 12, most likely. I know I've spoken to you guys about the content studio. That'll be ready before January. So hopefully the day that we do the Monday Mortgage Minute in person, you guys will be able to come in and film some content that day as well. Kill two birds with one stone, but you'll always be able to have access to that. You just let me know the day and time that you're coming, and I'll lock you guys in on the branch's calendar. Open house partnership as well. I mean, I kind of already do this, but you guys don't necessarily know because I don't explicitly say it. But obviously, if you guys need me at an open house when you have a listing, you let me know. But also, we'll be doing property websites for you guys, flyers, helping you with sponsoring that open house. If you need goodies, food, and stuff like that, just let us know. And if I'm not available, we have a bunch of loan officers here, American Bankers that can show up to that open house to be able to support you guys, especially kind of referring back to that business plan that we did last year, right? If one of your things is to open or to host open houses that your brokerage has listings on to be able to get those buyers leads, we'll be able to partner with you guys to be able to do that as well. Same thing for the listing web pages. That's kind of go hand in hand with that open house partnership as well. Customer event partnership. So we're going to be co-hosting with you guys, whether that be a event that you want to throw or events that we throw or close past clients and things like that. Of course, we're going to be giving you guys more information on the market consistently. Every single week, we'll be sending you email updates, not only about Monday Mortgage Minute specifically, but about anything else that kind of comes out throughout the week. And then broker office workshop, same thing for those of you guys that are brokers and you have some agents. We'll be going and calling you up on you guys to go over there and teach your agents different things, not just Mortgage 101. But you guys know the pre-foreclosure presentations that we have, the renovation loan presentation that we have, different things like that. And there's more that's not on this list that we'll be doing as well moving forward. But we've already started this month. Like I told you guys, I think it's I share this not only to show you guys what we're doing, but also to give you guys some motivation to get it done, get your business plan done, and start doing these things as well for yourself so that 2025 could look really, really nice for you all too. Anybody have any questions, any feedback on the business plan, anything that's not on this list that you would like to see? I can open up the floor for that as well. Like, for instance, hey, Mike, I actually would like, if my lender did X or my lender did Y, and I can tell you that's something that we're doing that's not on the list, or if it's something that we can consider. But yeah, anything you guys need? Any questions before we go? No, we're good. All right, I'll get you over the presentation as well. But definitely start working on your guys' business plans if you guys have it this week. Take the time to do so. It will work wonders for you. All right, y'all. I will see you next Monday.